It's Darren Gordon here, Centaurus Metals Managing Director, here to have a quick run through on the Jaguar Nickel Sulphide Project in Brazil. Look forward to chatting.
Dan, good to have you back, mate. Saw you back in September, day after my birthday. So I'll never forget it.
Halfway through another year.
Hey, well, look, it's worth a catch up because you've been quite busy since we spoke to you. I thought we had a great conversation back then about how you're developing the project, and it seemed to be all around two things, which was building out the resource and obviously through the drill program, but you're moving into this development phase too. So I just want to sort of catch up on that. Plus, you've raised $75 million as well to help. Just a little bit. So why don't we kick off with the 75 million first of all? So was that easy to raise? Who did you raise it from? What's it for?
Yeah, look, I guess given the strength of the nickel market, it actually was a reasonably easy raise, and I always say that lightly because when you're raising that sort of money, you don't ever want to underestimate the challenges associated with that. But it did come across pretty well. We were well subscribed, a number of Australian and international institutional investors, which will give us a bit of a change dynamic in the register, which is great. But that money is really to be used for all of the feasibility study work. We're full blown into DFS now. Targeting the end of the year, but then we'll also have some capital available to us to help us go through that financing conversation, and I guess always trying to have a balance sheet strength leading into conversation with debt and equity providers at the appropriate time. So I think overall it was a raise that came together pretty well. Did joint leads on it were Argonaut in Perth and Sprott Capital Partners in London. In the US there. So, wanted that combination of having Australian presence, but also then having the international base that we can tap into, given our project being in Brazil. It's
interesting, actually. You sort of say, give yourself the buffer to lead into conversations around the FID. I think it's always something people don't realize, that it may seem like you've raised a lot of money, but that really helps you in terms of the cost of the money once you need to get into the kind of the CapEx discussion, doesn't it?
Oh, absolutely. I think we could have easily pulled it back and said, okay, well, we'll just do what we need to DFS. But then you get into DFS, everyone knows that you need to raise capital at that point in time. So really wanted to, given the market demand that was there and people wanting to get a position in, a high quality nickel sulphide asset, it really gave us that opportunity to take a little bit more now, which we think in the long run will actually serve us very well as we go through that financing conversation.
Right. So let's look at where you are now in terms of that DFS. You've appointed Ausenco, well-known market leaders in the space, as lead engineer, right? So where are you today? What do you need to get delivered between now and the end of the year? Because I think you're aiming for a year end, aren't you?
Yeah, correct. So we're still targeting the DFS by the end of the year. We've obviously got to go through further metallurgical test work. We've got to, one of the big things that we've got to do is drill out the resource, lift the category. So we've got now about half the resource sitting in the indicated category, but we want to be able to lift that further so that we've got, the maximum amount that we possibly can measured and indicated, which will allow conversion to reserves, that will roll into that whole DFS finalisation. But yeah, I guess in conjunction with that, it's all the work that Ausenco is now going to help us with on process engineering, that we're now going sort of this hydromet path, pressure oxidation to produce sulphate. That's very clearly our product suite that we're looking to get into. And they've got the skills to do that. And then, it's really, I guess, culminating all of that with the financing conversation, as I said before, probably in the first part of next year.
And so remind me again, what's the intent here? Is it for you guys, do you want to get into production yourselves? Because it affects your discussions not only around the capex financing in terms of the quantum and the cost of it, but in terms of where you get the money, who you partner with, and those rates split. There's got to be an end market for you. You've got to have in mind. Yep. So I'm interested in the kind of getting money from Sprott in Europe. as a take there. So does that give us a clue into your thinking?
Yeah, look, I mean, we certainly wanted to change the dynamic of the register. Previously, it was retail, high net worth type register. It's definitely become a lot more institutional as a result of the raise. But yeah, we really see ourselves as doing the DFS work, getting through the approvals processes, and then doing the build ourselves. It is a nickel sulphide project. It's a lot more achievable for what I'd call a mid-cap type company, junior to mid-cap type company. And, we think it's a very attainable feat for us to be able to go and put this project online ourselves. Now, what that ultimately means for financing, who knows? It could still be bringing in partners, but it is still, in essence, us looking to go off and develop the asset.
Okay, so you're combining getting a strategic partner in as doing it yourselves, whatever. Because again, there's lots of ways that you can have strategic partners involved, whether it be capital, knowledge, or quite frankly, operational. So where are you guys at? I mean, if you've got the skill sets in-house to actually, get into production.
Yeah, look, I mean, we don't have a fixed view on where that is. I mean, we're going to be investigating all financing options. So I guess, broadly speaking, it's a financing conversation, a finance partnering process. Now, whether that then leads you in the path of strategics, that's a separate conversation to have when something comes up. But got to remember that with this project, that Vale still have offtake rights. So we're not really out there sort of pitching our wares to off-takers to come in and, fund that project there, because, this whole asset and our ability to have done what we've done today has all come about because we were able to do a deal with Vale in the first place, and that deal incorporated them having off-take rights for the product.
But does that hamper discussions for you or hamper options for you? Because, they have an option, right? There's no guarantees, right?
Absolutely.
So, but do you are you going to, between sort of now and towards the end of the year, try and firm up with them, what their intent is?
Yeah, absolutely. And look, we go through so the process is we will tell them what product we want to produce. We've told them we want to produce a sulfate. They've then got to make a call as to whether that's a product that they want to pursue under the offtake at arm's length market-based pricing. And so then there's a conversation around what that offtake would look like. And we're not trying to dive into things that we can't talk about, but that's a conversation that's still evolving, right? It's one that to date has been a very positive one, and our relationship with Vale is very good. So I feel like everything's tracking in the right direction. There's timelines set out in the original agreement as to when we should be able to reach offtake, and so we're just working towards those.
Okay. No, I just think it's a very interesting part of the dynamic. I know you pay next to nothing for this thing, 250,000 plus, obviously a land package which they wanted. Have you paid the 1.75? I know the 5 isn't due until production, but
that's basically now in line with the Ausenco appointment. Bring that in. That's all going to be happening concurrently. Yep.
Right. So you got the cash to do that. But I guess the bit of it I want to just talk about the interesting dynamic is, like, sometimes when you have these big companies involved, it could be absolutely seen as a lifesaver. It's a big moment, and there's the world's your oyster. But sometimes it kind of restricts you in the sense that because they're there, you've got other strategics who you may want to get involved or put off. So it's lots of moving parts. I guess just the point on that is that that is definitely the case, and that that's a real issue. But that was a real issue we knew when we bought the project in the first place, and so it's always something that we've had in the back of our mind. And if I get a solid offtake agreement with Vale, then I'm happy. So it's a good position to be in. For sure. Let's talk about the drilling, because I think a big part of this, our discussion last time out, was around showing scale, right? I get the 13-year life of mine. I get the sort of less than 2-year payback on it, and maybe those economics change dramatically between now and when the DFS is published. But 13 years life of mine versus a kind of multi-cycle life of mine. What's the drilling going to do this year? Apart from, you're going to be doing clearly some infill to get a bit more of it indicated, but in terms of the step out type stuff, what's the ambition there?
Yep. Yeah, look, I guess there's a couple of aspects of that. So the 13-year mine life that we've got was based on the resource that we had prior to the one we released in December. So what we've now got is a 730,000 tonnes of contained nickel metal. That should see us either increasing the production rate or extending mine life. So if you go back to the scoping study, I think there was correct me if I'm wrong, but I think it's about 340,000 tonnes in the production target mine plan type area. And we've already now got nearly 400,000 tonnes of contained nickel in the indicated category. There's about 500,000 tonnes of metal that is sitting in the top 200 metres. So with this additional infill drilling that we're doing, the intention is to push out the production mine plan resource and effectively become your reserves north of that 500,000 tonnes of metal. I've got 500,000 tonnes of metal. In theory, I'm recovering about 400,000 tonnes of metal. So then have I 20 years at 20,000 tonnes a year, or is it 25,000 tonnes a year? And those are the things that we've still got to fine tune. But so that's just with the resource that we've already defined. But then in conjunction with that drilling that we're doing for what I'd call development type activities, we are doing deeper step out holes that will continue to show that the mineralization continues at depth. And the nature of this ore body is it's a little bit different. Vertical, subvertical structures, they continue on. It's not an intrusive related system where you go in and you come out of the system. These things can continue on. It's more like a IOCG that you see in the other parts of the Carajás, like a Salobo or Sossego, not necessarily on scale, but in this form of mineralization. So if we can keep hitting that mineralization as we go deeper, and we can hit that across the strike, obviously that's going to further increase the resource, show that there's further mine life beyond where we are. But we already know that with that 730,000 tonnes, there's a pretty significant project. So, I mean, just in that base case of saying, okay, 20,000 tonnes a year for 20 years, it's, there's not too many people around the globe that are going to be doing that in a nickel sulphide asset.
Okay, so that's the change since when I spoke to you to the end of last year. So yeah, again, what was it? NPV8 at 1.1 and 52% IRR. It's clearly attractive. Did anything else change in those numbers? Because you were talking about, to me, 250 million cash flow per year over that period.
Yeah, I mean, we ran all of our scoping study numbers, remembering that was back in May last year. We ran that at $7.50 a pound and a 50 cent per pound sulfate premium. Obviously today we're over $11 per pound, and we're probably $1.10, $1.20 per pound as a sulfate premium. So, running those sort of economics, you're probably pushing just the previous production profile would give you something in the order of 500 million Aussie dollars per year EBITDA. So this is the scale, and that's our market cap. So that's 1 year, 1 year covered in the market cap. So we think that there's still an enormous upside for investors when they're looking at this asset, because I just don't think people fully appreciate the scale that is created when nickel prices are running hard. And I think anyone who's going to be producing nickel over the next little while, we're collecting this 25,000 bucks a ton type revenue side, is going to be making a hell of a lot of money.
Yeah, for sure. I mean, we talk about it sort of on a weekly battery show, in terms of what nickel's been doing. We talk about that every week, and the projections, well, the growth in the last 12 months has been fantastic. Agreed. Everyone's going to be making a lot of money once they get into production. But the forecasts look good too. Can we just talk about the type of drilling that you're going to be doing? So we get the kind of infill, but in terms of the money being allocated or number of drills being allocated to the expansion component, what's that look like? Yeah.
So look, we've now got 12 diamond rigs and 2 RC rigs on site. I reckon probably of those 12, you've probably got 8 working on, infill and geotech and, development type activities. And there's probably 4, maybe 5, depending on what's happening on any given week. But that is the sort of ratio of work on those rigs doing sort of step out type holes.
And with the kind of pit component, that's, what depth are we going to here again? Remind me.
Look, the pit now is going deeper with the economics, so we're probably drilling 250 metre holes inside the pit. So it's it's still significant, but there's a number of holes that we've got to do. We're trying to get measured category for the first 3 years sort of payback time horizon, and that'll probably be on a tighter drill spacing than what we're currently working to.
Right, and and just for people to be able to do some peer analysis, what's that equate to in terms of amount of meters that you're going to be drilling out?
Oh, look, I reckon over the whole year we should be in the order of 90 to 100,000 meters of drilling.
Okay, so
it's pretty significant.
Yeah,
it's one where we need the rigs, and fortunately, it's probably not quite as tight in Brazil as it is in Australia. We're not saying it's easy to get rigs, but we've been quite fortunate to be able to have 12 diamond rigs and a couple of RC rigs working on site. And I think that goes to the quality of the asset, because you've got the drill contractors and you can offer up the meters in these contracts to entice them in and actually get them onto your site, which is a good thing for us.
Okay, and obviously the Real doing you a few favours as well in terms of costs, so that's always nice. What about the kind of slight? There's a lot of conversation going on around South American mining projects. We've spoken to a lot of Brazilian companies, and they seem to say they're doing business there. One is less COVID impacted than it was, but the relations at state and national level seem to be quite good in comparison to places like Mexico and Chile and Peru. Perhaps are having slightly more negative stories. I mean, what's happening on the ground with you guys, and any issues that we need to be aware of?
No, look, I think I'd sort of agree with that sort of sentiment. I think that for mining exploration type activities, whether you're left, right wing government hasn't really changed much in the time that I've been in Brazil. I've been sort of there for 13 years, 14 years now. And we've had left-wing governments, we've had right-wing governments, but they've all generally still understand that mining exploration activity is still a core business for the economy. COVID, again, I think is now, there was obviously issues there. Like anywhere, the number of cases are probably going up, but the hospitalisations and deaths are probably coming down on a relative basis. And, I think people in Brazil are looking at it and going, well, it's business as usual now. I guess I'll get the opportunity of heading over there in a couple of weeks' time. It's the first time I've been able to get back to Brazil for 2 years. So thankfully, we've had a amazing group of people on the ground that we've worked with for a long period of time, and have been able to push this project forward, during this period when travel's been more problematic. But it's feel like we're in really good shape as far as where this COVID situation sits now. It's really just, it's all embedded into your overall activities, and you just deal with it.
It's kind of interesting. We've had a few conversations with companies coming on and saying, well, I'm not actually sure I want to be putting out DFSs at this time, because people are just having to get used to a new sort of pricing regime in terms of the costs, right? Prices have gone up across the board, and doing apples for apples comparisons with other companies is a little bit more difficult, because they're using maybe slightly out of date cost numbers. So how do you feel about that?
Oh, look, it's a very real issue. I mean, I think globally, inflation's the real deal. Whether you're in Australia, Brazil, US, Canada, whatever, you're still dealing with inflationary pressures. Fuel costs are going up. So you're going to have to be pretty vigilant in your numbers going into the DFS. You're going to have a margin for error in there. You're probably going to have a bigger contingency in there than what you might otherwise have. But we'll be solid with the way that we do it. We'll go out and we'll talk to the suppliers, remembering that there's a lot of gear that we might be buying as one-off items, and we can really lock down on those costs and probably get to a point where those are squared away as hard numbers, and that'll be the plan of attack. So, the risk for us is probably still in just that first half of next year of just, okay, we finished the DFS, we've done the CapEx, we've done the OpEx, we know what the mine plan is. That's probably not going to change. But then we've got to still get through all of the environmental approvals, and that's we're talking still probably middle of the year 2023 as when we get our approvals and really being in a position to make a final investment decision in Q3 2023. That's always been a target, but it's just that we've got to be careful on that 6-month window between doing the numbers and then going, okay, well, now we actually want to actually build this thing and commit to these capital items. So, we just got to be mindful of that, I think, Matt.
Yeah. Well, maybe this one will keep raising its head with regards to, how companies treat these costs, because it's kind of the kind of deferring, right, or delaying the recognition of that, or perhaps misleading people with the costs in the DFS is going to be problematic further down the line. And we've seen that affect a few companies recently. And share price have been absolutely whacked. So you've got to be honest.
Yeah, no, well, I think that I don't think there's any wins for anyone in sort of not putting your best foot forward. I mean, people still want to have a good project, but there's no point putting up something that you can't get. Now, there is still the reality that inflation is there and escalation is going to be there, and so you've got to be managing that carefully. But that's what I say. You actually want to be telling people what you think is the project that you can actually build, and then try to hold that. But I agree with your point completely. There's no point trying to sort of paint a picture of something that is not there. I mean, you need to have some reality with these things.
Yeah, you do, but you'd be surprised. They come on the show weekly. Look, and just one thing on the environment. You touched on the environmental component again. It's something which is getting more and more complicated globally. Right. Pará is a good state in Brazil. It's a mining state in Brazil. But even so, you've got to go through things the right way in terms of the paperwork. Mm-hmm. How is the kind of are you having to spend more time, money, and effort on the kind of the ESG component, with local people, with local businesses, with all of that takes time and money and everything that it entails. You got to do things the right way. Are you finding that the heat is turning up there, or is it just for you business as usual? I
think for us it's been business as usual, because we've always taken the approach of employ locally, engage suppliers locally. We are whilst it's far and it's a good mining state, we're still a relatively remote area. Remote, but remote with infrastructure. So again, you've got people that have been in the mining industry for a long period of time. You've got suppliers there. You're still going to have to do the right thing, but we've been doing a lot of work on upgrading the roads. And that was always part of the business model. It wasn't like we're feeling like we've got to ramp that up any more than what we were doing. And I think the other thing that sets Brazil apart a little bit in that is that 65% of the government royalty goes back to the municipality where the project's located. So there's already a strong incentive for these municipalities to get behind your project, for the community to be wanting these projects to go ahead, because it drives jobs and it drives the economy at a local level. And we see that all the time. And I feel like we've done a really good job of sort of working in that environment to make this project happen to the state that it is already. Obviously got to go a long way further yet, but I think we're getting there. I think more broadly, the environmental approval process is just something that we've got to continue working with the environmental agency. We've lodged all the documents that we need to do, and we've now just got to keep talking them through it. This is the project. This is what it looks like. If you've got any questions, how can we help you? And then we've just got to try to push to get that as early as we possibly can.
Right, and
because for us, because that is still the time determining factor to first production for us.
Yeah, totally. And if people see, if you're shareholders or others looking at this, see, I know you submitted the EIA and the REMA and the PAE, but if there's pushback, that's just part of the process. It's not, we've got a problem with this. It's just, we need more information. So.
Absolutely.
Yeah. Okay.
Yep. Yeah. So I mean, we've licensed projects in Brazil before. We had the iron ore project way back when, and we got through the environmental approval process there. We know what the process is, so it's not like we're doing something we haven't done before. It's really just about working with them. They might ask for more information. I'll go and get some more data here, but we feel like because they give you the terms of reference to what needs to go into that environmental impact assessment in the first place, you've already, or we feel like we've already addressed all of the things that we need to. It's just now a matter of making sure that they understand what the project is and clarifying anything that they need clarified.
Okay, well, and sorry, and iron ore, that's still parked up. You still got that, right?
Yeah, we have. We've still got it
parked
in
up
the background.
Okay.
Yeah.
Because again, we talked about it last time. It said in terms of no M&A, focus on delivering this project and expanding this project. Once you get, are you going to wait until you get to the FID stage before you start looking at, well, where do we go from here? Or will it still be a case of eyes down, let's get this thing built properly and not be distracted?
Yeah, look, I mean, it's a very big project, so we've got to be mindful that we're not trying to take on too much. I think there is a world of opportunity in Brazil in and around where we are. But part of that opportunity is created by doing this project the right way. So if we can actually get in and do this the right way, start the build, there will eventually get to a point where there's a team of people who are in there and they're doing the build, and then corporately, then you can start to think about other opportunities. But yeah, it's, we're not looking at going down that path too early.
Yeah. Okay. Brilliant. And yeah, I guess you'll be talking to Vale very keenly at that point. Darren, good to see you. Great. Yeah, exactly. Great to catch up with you. Nice to see things advancing at pace. Stay in touch. Let us know how you get on, and maybe when some of these drill results come through, maybe start talking to us about what you see in terms of that geological development component too. So appreciate your time.
Yeah, absolutely. Look, I mean, I think we've got a really busy period ahead of us. Lots of drill results. Hopefully getting through first phases of this environmental approval. Advancing the offtake conversations. So we still see that there's a lot of activity in front of us, and hopefully that means news flow for investors. So we'll see how we go. Thanks, Matt. Good on you.